Happy Friday, JT. How you doing?
Very good. Thanks.
I'm excited to have you on the show. For the context of the listeners, I was sitting down at one of the local entrepreneur networking events, actually, where we saw an economist speak that I had interviewed probably about a year ago or so. You and I started talking, and then it was the energy, your story. Then you had twins, and you like to work out, and you like to have beers, and I was like, I think we check a lot of the. All that's true. Yeah. Yes. No lies there. So but you told me your story, and I was like super excited to get you on the show because you come at this the growth and the sale of a company from a completely different perspective, from being the key manager and the executive on the deal, working with the owner, and so here we are. And so maybe for the listeners that aren't familiar with you and your background, where did you start off? How did you get into business?
Okay. So again, my name is John Thielen. Everybody calls me JT, but my background is primarily sales and business development and managing teams to achieve a shared vision sales growth number. So my background involves 4 startup companies and also 1 SaaS company from the Midwest over to San Diego. So I've been fortunate enough to grow quite a few companies. And so I've typically held CRO type positions in those companies. And so from as small as opening up an office in Minneapolis called citysearch.com to I ran San Diego.com and created a national network there of city.coms across the country. And I worked with AOL on a big project. That was probably my biggest job, where they put $350 million into launch a platform for hyperlocal news across the country. And we hired 1,000 people without anybody knowing it, because we didn't want the newspapers and publications and other media sources to know about it and say how negative it will be. We wanted to be disruptive. So I was one of the earliest adopters for that. And I ended up being promoted and being a publisher, director of sales, managing 4 states and 60 cities, and having about 80, 85 direct reports. But primarily, I'm a revenue driving executive.
So in as we kind of go into that, because it's going to probably tie into some of the strategies that worked at in the last business that you're in, but what are the revenue drivers, and what was the makeup of how you would, what falls under the chief revenue officer? And the reason I'm giving that question some context behind it, JT, is that in our 4th principle, we have what it's called increased value, and sales and marketing are 2 of the top 8 value drivers, and creating repeatable systems behind them. And so I'm just kind of curious, in your experience in the different ventures that you worked in, what would make that up for you?
Yeah. So this is to get inside my head. One is that you dream it, then you demand it, then you execute on it. So let's say you dream of it. So what do you want to grow something to? And then, because you and I are very KPI focused, Darren Hardy compound effect type guys, well, okay, that's a dream, but let's back into this number and from the most granular and say, hey, what do we need to do on a weekly, monthly, quarterly basis to hit this? We call it BHAG. So what I would have been able to do is digest a number, backtrack into it, and say, what do I need to do every single day and to grow that? So then it comes down to what teams, what must I hire? And, is it inside? Is it outside? And, it is trial and error, but one is just you try to put things in place to grow the product. Mm-hmm. So that's what I've been able to do, even from this last job, that I was able to scale and sell a company.
I love how you said that, and you digest the number and you back into it, because I was interviewing this guy, Jack Stack, and he very well articulated the kind of the great beginning of business. I don't know if you're familiar with his material at all, but he says, okay, you start with a strategic plan, what markets, what geographic location, product, service mix, etc. Then you have your sales forecast, and then the financial forecast should reflect your sales forecast and making sure you're making money, because growth consumes capital. So how do you determine what was the process of digesting that number? Was it like a revenue number? Was it a profit number? What was kind of the key metrics that you're measuring?
Yeah, it typically varies, because the businesses I've been in is that MRR number, and monthly recurring revenue. Mm-hmm. So it could vary from, okay, I get a sale, but cash in the door is another conversation. So
Right.
sales and revenue in the door are completely like cousins, right? One cousin you like more than the other, right? So, right. So, I would, in the last company I was at, we broke down that number down to gross sales as a KPI. And then we broke down to our leadership KPI was how much recurring revenue is coming out of that. I ended up having to put initiatives in place to have a fast and effective onboarding campaign to have those come close to matching. But with those other companies, which were, let's call them advertising driven companies, well, you would pay me $500 a month. Well, if I sign you for a year, that's $6,000. So that was pretty easy. And every sale, the business goes up, $500 in revenue, and I have 6 reps doing that. Then then it multiplies. It got a little bit more complicated at my last SaaS company where we closed business and revenue trailed.
So let's get into, because I want to hear, maybe we can get into the most recent projects and how you did this. So how did you're jumping from the publishing and the sales, publishing and marketing world? What was the journey to finding the recent gig?
Okay, that's an interesting one. So when we were growing Patch through AOL, that big initiative, Tim Armstrong was the chairman and CEO of AOL. And he was getting a lot of flack out of New York nationwide about what is AOL doing? They don't have deep pockets. Is this run rate profitable? Are they spending too much? And so what happened is the board of AOL started going, well, you got to get this, hit your projections. Well, that was not as visible to us, even myself, who was managing 4 states and 60 cities. I knew what we were doing on sales, but what rolled up to New York, we didn't see on a national basis. He started mentioning that if we might have to have some error, recalculations. And then one day, now that I look back on it, he was unable to sell the board on continuing. Out of 1,100 people, 936 were laid off one day.
Oh my
and
God.
I was one, including myself. We called into a conference call line and said, "Hey, well, what's the next plan and initiative?" And then it was that was it. And then AOL ended up selling off the property to, I think it was Hale Global, another private equity group, and sold it off. So I was at a cabin trip with my wife and kids, and I'm like, at that point, my wife has twins in the oven at 8 months.
Oh, they were not even born yet. Oh my god,
not even born yet. And I went, okay, well, that's a curveball. And so
that's a curveball. It's a nice way to put it, right?
Yeah. And I actually emailed Tim Armstrong, the chairman of AOL, that night, and then he was gracious with me to put something together, a package financially and stuff, and severance and healthcare and benefits, and it was fantastic, right?
For me, really cool.
But that didn't solve what am I going to do next.
Mm-hmm.
So what happened is I started looking around, and there's this lady that came across my network named Debbie Wright, and she's an EOS implementer. And she said, "My husband has been looking for a guy like you." And I said, "Well, what's a guy like me like? Maybe we should have coffee with him." She goes, "We bought a background screening software company for $2 million, small company. And we put in EOS, but we don't have the key integral parts of running it done yet." Steve Gustafson is a visionary who is not accountable. He has big ideas, but everybody, says, "Yes, we'll do that," but then goes a different direction because he'll wear out and fizzle off. He was kind of a seagull management, come in there and poop on everything and fly away.
I have not heard that one before. Okay, I'm going to be stealing that one.
Yeah, I know. Yeah, you're going to remember that one. So what happened was I said, I'm from, a different business category. I would love to have coffee with him. So we end up having probably 11 meetings at DB Bryan's in Edina, just talking about philosophies and what I'm like and what gets me out of bed and how did I become, successful at a young age. I was director of sales at 27 and opened up an office for City Search at 25, right? So I thought, I said, really what triggered it for Steve was this conversation. I said, I've always been a wild bull, right? And where my career really got focused is when I used discipline. You and I talked about the compound effect. Well, I ended up meeting a guy in San Diego that was a decorated Navy SEAL, and this was a guy that he was SEAL Team 5 under CIA Delta, only doing capture kill missions.
Oh my gosh!
And his background is he got a degree in English at SMU and finished up at Oxford, right? He's a really smart guy, and so he did tours in Iraq, normally it's Fallujah, and then it was Africa. And then what happens is after his time there, he's he's probably 3 years younger than I am. He got out, and he says, "Well, I'm going to get my MBA at University of San Diego." And I met him at the gym, okay? And we just our relationship just hit it off. And I was enamored by him, that he was a Navy SEAL, because that's the mental discipline on that. It's like,
is insane.
I wish I was that guy, right? And then how he could just hit his goals and accomplish it. So he gave me this mental discipline. And I started reading SEAL books a lot, that, you can accomplish anything if you put it in front of you. Like I graduated SEALs, Buds 235, with Michael Murphy from The Lone Survivor, who that happened. Actually, he passed away in that show. Well, he graduated with Michael Murphy. He was, out of 200 people, it was Brent and him were the 13 that got through. I said, "Well, how did you do that?" SEAL, he goes, "They're not, my brain was higher level. I thought, well, they're not going to kill me. I guess I could die." But he goes, reality is that I look at it, the end game. And then I say, if I get past today, then check, I'm stronger than they are because I'm overcoming this. So he taught me mental discipline and being accountable and say what you're going to do and do what you're going to say. So that's a little bit of, what I've morphed into. So when I met Steve Gustafson, the CEO and owner, 100% shareholder of the company, he goes, "I'm looking for a guy like you, and let's just work something out. I need you to be the integrator of the EOS model. I need to have people held accountable. I need vision. What EOS also lacks, even though it's a great framework of operating your business, it lacks vision and growth sales initiatives and swim lanes to get
strategic planning, right?
5 years old."
Yeah, and like actual strategic planning, like as in like how are you going to actually get there? It's funny because I was right as we jumped on, I was saying that I just did a presentation to a couple dozen EOS business owners, or they were business owners that run an EOS, and I said a strategic plan is not going from 10 million to 15 million. Like that's a goal, right? I mean, but like how are you going to actually do it? It's a different story, right? Like there's different choices.
And that, even though in a way I was like, well, I can't tell you how we're going to do it today, but it does take trial and error, and we course correct. And so I came into this organization, his wife and Debbie Wright, and Steve was like, I want to make this a $10 million company. And I said, well, at the moment, the people who work here don't know what a $10 million company feels like, of accountability and process. So let's do it. So long story short, I ended up, success is never an elevator, it's steps. So we made some moves, and we ended up just continually growing the company, and between $800,000 to $1 million in revenues per year. And we went from, I got there, the company was doing $4 million in revenues. And again, he bought it for $2 million. At this point, he grew it a little bit. I got there right around $4 million, and I ended up growing at that $800,000 to $1 million or more. So, 18.
And you're saying, is that money? Is that monthly, you're saying? So you're going from 800,000?
Monthly recurring revenue. Yep, that's MRR, monthly recurring revenue. And then I ended up, once I got it down up to, then 9, and then 10 million. And we, we got our EBITDA up to $2 million. We'll talk a little bit about that. Why that's the most important. And so,
yay! Yeah, someone's talking about the important numbers. I love it.
Yeah. So here's this. You'll like this. This is Steve ingrained in me, and I'm like this too, personally and professionally. It's not what I make; it's what I save. So a lot of people are not like that, right? I became a millionaire at my age because I save, not because what I make. That's how I think, right?
You have $1 million worth of debt and stuff everywhere.
No, I'm liquid. So what Steve said is like, Johnny, we're not here to play store. We're not here to play store. We're here to make money. So that's the difference. Some companies have the mentality of let's grow top line, but not the bottom line. So he also mentioned that there's two truisms in business. Expenses always creep up and revenues creep down. So you got to be diligent on pushing revenues up and pushing expenses down. And so it hit home to me because I was like that in my own household. I went, bingo. Let's not play store. Let's make money. And by the way, let's financially reward you, JT, on that. I said, this is what my program was. I'll be honest. Is like I was paid quarterly and annually at times on some metrics, but the key drivers were profit. So I put a plan together. We agree to it. Some of it's stretched, some of it's realistic. And on my quarterly bonuses, let's use that as a clean example for everybody listening here. 75% of my comp was on my ability to hit profit numbers. 25% of my comp was based on my ability to hit revenue numbers. So again, if you put incentive plans to change behavior, well, put the right behavior in.
Right.
The behavior we did was profit, not so much revenue.
Okay, so I want to keep going, and before we keep going, because this is some meaty good stuff, because for the listeners who own companies, I'll kind of go back and I want to kind of maybe hit on a couple of things you spoke on throughout that part of the journey. Is one is that so I'm making my partner and I read Rocket Fuel because again it's the whole integrator visionary. Gino Wickman has been on the show. I've interviewed a bunch of EOS implementers, and so very tried and true to our heart. But like again, I think you said that this is a couple pieces of this. Is one is that how do you find the you, right? So I mean, if I had $1, JT, for every single time I said or someone said I need to find an integrator, right? Because there's an interesting dollar amount to kind of give some context as I'm going to kind of touch on some of your points is that when you're able to like as the owner's able to afford you, and then how do you take your comp and how do you tie all this to the ultimate outcome, right? Which is you talking about start with the end in mind. So this Eric, it was Eric, your owner, you were saying? So he sounded
Steve is your owner.
Steve Gustafson is what you said? So Steve has very, first of all, he's already decoupled himself from the focusing on annual income optimization to value creation, right? So just the comments on quit playing store, let's focus on EBITDA. I mean, I was part of Vistage and where everybody's like, I did 20 million in revenue. I'm like, who cares? Did you make any money? What's your EBITDA? So you and I are speaking the same language here about focusing on what's right. So maybe a couple of comments on how to find someone like you, and then what was your package? So that bonus structure, I want to get more into that too. But then how did you get, how did that actual onboarding go? Was there equity? Was it just cash bonuses? Was it, tied to an ultimate end? And then, so that's kind of the first question. Second question is the bonus structure. Did that include normalized EBITDA? So I'm curious if if it was just profit or if there was ways to increase the value of the company. So
yeah, good point. So that's true. So for all those questions, let me jump in.
It was a lot.
So when I was fortunate to have an owner named Steve, who he had a finance mind.
Okay.
Right. So he was in the business. He bought this company as, let's call it, an investor mindset rather than this is my lifelong dream of running this company. So that can separate some owners from other owners.
A lot. That's a huge, big difference, right?
Right. So so how he found a guy like me was he was looking for somebody that he could relate to one and go to battle with, right? And a very transparent person. So you're very transparent. I'm an open book. That's served me well because my why, and I was big on my why, was I like to create value. I like to say I did something. So maybe this comes from being a small town farm boy kid that has a twin brother that wants to say, hey, I'm successful. Well, I like to create something. So that bodes well for an owner that says, hey, good. I like to create something too. Let's create something together.
That's
right.
awesome.
So that made sense. And then I'm big on a shared vision. right? So, okay, now if an owner said, hey, this is what I want to do, and the core values align, well, then you know what? I'm your guy. I like to partner with somebody. My last 3 jobs I've had, I really connect well with my direct report and shareholders. So it's kind of, I want to take one step back. It's kind of like this. My best advice of anybody in college or in the real world is this: your direct report or boss, find out their one thing is, and so you know where you stand. If you do that one thing, then you know that you guys have a synergy. So I did that throughout my career, is knowing my boss's one thing, and so then I would do it. But a lot of people have this mentality like, well, these are the 5 things I'm working on, and everything's important. No, what's your boss's most important first? First important, and everything gets trailed down, and you kick ass, right? So, right. And so I was big on that. So again, if you have a shared vision, then and we say, let's go do this, I'm the guy you want in a street fight. Because I'm like, let's do this. I'm all in. Because that's my personality too.
I want to go to battle with you right now, right?
So and then 3 was, I want to this matching this core values, and then I like creating relationships. So Steve Gustafson, I sold the company on January 4th, and I talk to him every week. He calls me every week just to talk. And so, I'm a different guy, but I like to connect with the people I spend my time and work with. Because I'll do it for you. I'll give you my all. But and so maybe it was unique.
I think it's the fun part about it too, and like I think everybody wants that. And then maybe go and explain a little bit about the package, because I've heard so many times where like the owner gets infatuated with someone with your skill sets potentially, and then they immediately just give equity, doesn't tie it to some ultimate outcome, and then there's a big falling out or something like that. So like, did you like, was there an equity package, or was it growth and equity, or some phantom stock?
The next time around it would be different, but in this situation, this was a Minnesota S Corp 100% shareholder, him and his wife. And so in this situation, when I came in, he was very generous on salary, and he was I would say even more generous on yearly comp and quarterly comp, based on, hey, if we do what we say we're going to do, you're going to make a lot of money. And so at that point, we came in synergy. And then once I was able to grow the company in year 2, year 3, we had more of these discussions on, okay, what's the exit end game? And that's where I ended up working out a deal at the end to make some money, real money at the end. But but I made a lot of money along the way,
which makes sense. I think it's a good point though, because like, to be generous up front, because I think there's a delicate balance of an owner giving equity too fast, too soon without the reward. But then again, if you grow the value of that asset and you grow the cash flow, you can pay through income and cash, like you were with the bonus structures that you're tied to eventually get to where there's a bigger event, right? Because it doesn't happen unless it happens together. So in your bonus,
So
go ahead.
So Steve was big on that. Hey, if you can make me more money, I'll make you make more money. And so that really rang true to me. So I thought, oh, interesting. If I can double his income, well, I'm gonna ride up that wave as well, right? So I came in, making, Steve was big on, hey, I'm gonna be my side of the street's gonna be clean. I'm gonna give you what you're asking, and but we're going to create a plan and vision where you're going to make a lot more, and I'll prove that to you. And fortunately, over the course of 5.5 years, I was making twice as much as I ever made. Right, it's all worked itself out.
Yep. So in your bonus structure, then JT, was it just profit and revenue based? Was there actually any normalized? Because I've worked with different comp plans, and then also, with the ultimate, end goal. And if Steve is focusing on value creation, which he was from the beginning, a lot of this stuff recalibrates, because I see, someone that's not focused on value creation is focused on how much money they can make, which then would not allow them to hire someone like you to give you the benefit. So the mindset shift, like you said, right off the beginning, right off the bat, allowed for this whole circumstance to kind of create.
Well, Steve was smart at the start. He said, I need an integrator. I have an entrepreneur operating system, traction, system. And he goes, and what I need is the most important piece of that, which is an integrator, right? And so he budgeted for that. And then I ran with it, created a financial model saying, hey, 35% of the pie will be COGS, 15% will be sales and marketing, 15% will be G&A, and 5% IT. But guess what? 30% goes to the shareholders. So so JT, when you build your plan out, take into effect that
that's a fact.
25 to 30% going back to the shareholders. So
Yep.
I think any owner listening to this or trying to grow their business, if you're looking for a partner to help you build it, it has to make sense, and you have to really connect with that individual and have a lot of conversations and about how you both can win. Be open and honest about it, and then then it becomes clear.
Man, I couldn't agree with you more. It's so awesome that you've got such a humble view of that too, and in a realistic view. So on one the note on the comp plan, I am just curious, was there a normalized EBITDA and were you able to control all those models? Because, there's a couple of things in comp plans that I see go completely south. One is the comp plan is put together and then the person actually can't control everything because there's micromanagement and you're kind of getting dinged left and right. Or the other one is,
true.
The other piece of that would be is that it's not on like what we call the normalized EBITDA, right? Where it's, you need to be investing in the business to grow the value of the business. So how did you balance investing in the business and your comp plan? I mean, was there any discussions?
So good question. So when let's say we put this budget together, and within the budgets, when the cash flow would be the top line revenues that would happen monthly. We were a monthly recurring revenue, so we would have our targets. So Q1 would be, we're going to go from 600,000 to 700,000 to 800,000, top line revenue. So the bottom line where I was paid, let's say on the quarterly side, was on the net income, operating income. So now, not right down. There's some things below the line that Steve didn't want to penalize me for.
Yep.
So for example, like my budget said, I'm going to bring in $500,000 of net operating income to the business. Well, then that's how we're going to pay you on of hitting your goal. And so then it was just a clean 75%, whatever the number was, going to be paid out on profit, and 25% of that will be paid up on revenue, and that would be your quarterly bonus. And then we just kind of ran with that. There'll be some things
simple and good though.
And it's clean and simple for me to understand. You always want your comp packages to be understandable to your employees. Gosh, I've had so many that I've had I'll kick butt and I have no clue I'm going to be paid on. Right?
It's so true, isn't it?
You need, again, if I'm, it's kind of like if you're going to go into the alley with a street fight, you want to know what you're fighting.
Yeah,
right?
Bazooka or knives or what?
That guy is too big. So, but it's just imperative that everybody understands how they're going to get paid, because that's how you're going to get the most out of your individuals and salespeople too. They will give them their all, and then you can help reward and celebrate them along the way because it's clean and simple.
So let's go into the growth of this, and maybe give some of the metrics all the way up to the sale of the revenue and the profit, or whatever the profit, the net operating income, or the EBITDA that you're measuring. And so kind of give us the framework or outline of the growth project, the milestones that you hit. And then what were the strategies that you were putting in place to accomplish it?
Okay. Well, that's a long story, but I'm going to try to simplify it. When I first got there, I had one salesperson who's making a lot of money, but he was the director of sales. He was the VP of sales, but it was only him. And everybody was focused on that one individual. And I wanted to create a sales team. I wanted to create a customer experience team. I wanted to have account management team, because if I was able to drive revenues, new sales, net new sales, a second thing I need to do is onboard them the right way. Use the term of dating. You need to date somebody. You can't one night stand somebody and expect them to stay forever. So if you onboard them and bring them in and take care of them and how's everything happening, you're gonna have a long-term client. So what can I do great on CX, right? So the onboarding, and then customer experience, and then account management team. So that's some of the internal things I did well there. I did hire some salespeople from the industry. And Debbie Wright, the EOS implementer, which is his wife, Steve's wife, would say, John, you're a master recruiter. We didn't know that about you. Like, people like your energies. And so I was able to get people to leave their bigger jobs to my job.
Mm-hmm.
Right. And it's because I said, I had this, speak of, hey, let's create something. Let's have the best job, last job. That's
Mm-hmm.
how I call it. Best job, last job. Because wouldn't that be amazing if, like, you created something and you can brag, but these bigger companies you work with, you don't necessarily have that. So I recruited people from the industry that were bigger than me to join my little company. And what happened was we ended up creating a national sales team from San Diego to South Carolina to Chicago. And so we were getting nice sales. And so, but over the course of that growth we've had, I found out that my director of sales, which he was a great guy, wasn't the best for our next level. And outside national reps for us cost a lot of money. We closed business, but the revenues trailed so much. We wanted to go in a faster close cycle. So I wanted to go into an inside sales model. So I thought we can do more growth, more volume, faster by having inside sales reps.
So can I interrupt you for a second? Just quick questions.
Yeah.
I want to dive a little bit more into how you built out that sales function and the different roles and responsibilities. Maybe because I think we skipped over what was it you were actually selling and how was the product and service actually bought and what was the client actually engaging with you guys for?
Okay, so we were selling employment background screening and then residential background screening to nationwide. But most of our business was just in Minnesota. And my initiatives there we look like a Minnesota company. We look like a small regional Minnesota $2-3 million company. Well, first and foremost, that's going to change. We're going to look like the big guys, make it till you fake it, right? Make it till you make it. So we went through a brand re-strategy to make us look like we're a national company. And then we started, because anything what we sold in Minnesota, we can sell in San Diego.
Mm-hmm.
So what we started doing is selling to those other geographical areas. And then we were able to start getting revenues in from other streams across the country. And then, by the time I sold the company, I think it was 35-40% of our revenues came outside of the state.
Oh, wow. Cool.
My dream of being a national company was coming true because I dreamed it, demanded it, and executed on it, right? So it's just a dream if you don't try. Now, there's some failures in there. I started growing the outside sales team, and we got to a ceiling where it was not working as well, and it cost a lot of money to bring those types of people in. And then we brought in a marketing director to create more of a marketing channel, and we started focusing on small, medium businesses. And those were highly profitable to us. And we figured that out along the way that maybe we should just continue selling these small, medium businesses. Yeah, they're not as sexy as a $100,000 account, but you sell a $5,000 account, they start right away, they bill right away, and you just do that more often.
And you make more money potentially too, right?
And you make more money. And our margins were, 35% versus 20%.
Well, and so some of the stuff that, like, just to point out what you guys did is like, so when we look at, there's a system we use to look at like the ways to increase the value of a company. So you go through and say, okay, in the sales and marketing drivers, it's like, are you geographically, can you geographically expand? Are you doing outside sales, inside sales? How are you doing your marketing? So, you did a lot of that stuff and you grew into
help of other people. Yeah.
Yeah. And I think maybe, do you have any, comments about how, like with the salespeople, did you have like a revenue per, like how fast did the salespeople pay for themselves, or maybe some metrics that you use to compare, like in grow, to grow that sales function and then pivot? Because the reason for the question, JT, is that, most of the time when we take people through this assessment, strategic planning is very weak. Sales and marketing are not repeatable processes. And then the finances are usually, not adequate. So in the sales and marketing, if someone's got to build out a repeatable process and they're looking for, they're going down the digital marketing route or they're going down the sales route. There's all these different ways to generate revenue. So what were some of the metrics that you did to build that out and then to pivot, and what were you looking at?
Okay. So again, from the outside viewers, my business might be a little bit different than theirs, but what I did is first and foremost, having visibility KPIs on what you're trying to grow. So, having a salesperson pay for himself, one of my leadership KPIs on the sales side was, what is their reoccurring revenue, not sales, but the revenue they're bringing in, and I can analyze that against what I'm paying that individual, and so that just tells a story, a KPI that tells a story. Sales growth. That's just I'm just comparing numbers from year over year to make things simple in my own head. And so again, it's like lifting weights and building muscle. You have to zero in on what you're trying to grow and see it year over year and see how is things changing. So we put those things in. I looked at what I'm spending on marketing and what the net is coming out of that. And so you're looking at a lot of different, pieces of information, and it's kind of like the Jack Welch book. Like, not everybody's a finance guy. I wasn't a finance guy, but what does the finances have to tell a story? What's a story telling you? And that's where Steve and I would look at it and go, what's this telling us? What's the story telling us? What's the finances telling us? Okay, we found out that national salespeople that were paying $85,000, $90,000 a year base salaries and then commissions on top of that, well, their monthly recurring run rate takes a heck of a long time to pay off, to pay that salesperson off.
Right.
But if I had an inside person making $45,000 a year and they're closing higher margin business, well, then now I have more room to invest in the other areas of the company to grow, i.e. marketing dollars, right? So there's no easy answer other than those trial and error and seeing trends and what's working and what's not, and then course correcting.
Yeah, I agree with you on that point. But also, what it's proven that you're showing that you had the numbers and accurate information to be able to make those decisions. Because again, you can't make those decisions if you don't have that information.
Yeah, and so that's a little bit of EOS to me, is like, what's the most important numbers? What's the most important numbers for the leadership team? Then what's the most important numbers that we can track on the sales and marketing team? What's the most important numbers on an operation? And we build KPIs, and we actually personally built KPIs week over week is our kind of business.
Oh, really? Wow.
We did week over week, yeah. And green was par, like that's what we want. And yellow was bogey. And red is we can do a lot better. So if you see a sea of red, then you got to look at, okay, well, I've seen 6 to 8 weeks of red. Well, it's telling us a story, right? And why? And let's deep dive into that.
And by the way, I just have to tell the audience that I saw your 5-year spreadsheet of your workouts that are built like this too. So it's a real thing. I can only imagine what you did for a business if you do that for yourself.
Yeah, I'm the king of compound effect. I live and breathe it, don't I? So again, that's my discipline of how I use energy to go one direction.
How do you focus on that stuff? So as you guys are running, you got week over week, you're getting the data. What is the method inside of that they're using to focus and how to actually figure out and prioritize the different things that are sitting in front of you?
Yeah, I would say I was fortunate. I hope I'm not come across because I'm only as smart as my team that I brought in, which you become smarter because you get their successes. But my IT director was able to create this ownership report that I would say, hey, I want you to be granular and create a line item that tells me this, right? And he would be able to build it. So I would know what a guy named David is doing on daily revenues coming in the door based under his name, right? And weekly and monthly. So that helped me be able to go, oh, I can create this situation. Okay, let's do this. And so I had all these value points that I could build a story off of.
As you are building this machine that's growing significantly, and you said you started having a conversation with Steve about what's the exit, and you built, you kind of built your package of you guys both started talking about the exit. Explain the conversations you started having and what the ultimate goal is that you guys started solving for, and then kind of how that started moving in that direction.
Okay. Well, it will be unique because at this point, I've been successful at this company now. I'm the president of this company. Steve is planning. He's at this point moving away. He's moved down south, and so Steve became really only became a friend, even though he's my owner of the company, because was more of the board to me. He would come in and just chat, hey, how things going? And I would just roll things up high level to him, and give him weekly reports and monthly reports of how things are going, things that I'm working on. So I bet you a lot of owners wish they had a guy to go, hey, we
man, you're making a lot of people jealous right now. You're making a lot of owners going, how in the hell?
Hire me. I'm looking for work. So then, the business is just making money and it's doing really well. And we found a sweet spot in this SMB marketing channel, selling, software SaaS, subscription, screening. And so what Steve came to me one day and said, John, I'm thinking about taking some chips off the table, and I need you to help sell the company. And if we don't get the price we want, then I just go back down south and hang out and take distributions, which is fine too. But wrap your head around that, JT, he said, and let's talk. So I was on a trip with my wife out in New York, and he ironically was there at the same time with his wife, and we went out to dinner and just talked. And so I became fully engaged in helping him sell the company.
So, and if I could just peel that back just a little bit, JT, is that conversation I think scares the living shit out of most owners, because
it scared me too. It did scare me too.
Well, I appreciate the honesty, man, because most owners avoid it like the plague, try and do an end around their number two like you, because you could potentially hold them over a barrel. You're the guy. So how did you guys deal with that? And I'm curious of the conversations that your guys' families had.
Yeah. At the time, I wanted to make this much bigger than a $10 million company. I had a great job. I'm a president of a company, and I have some great people within it, and I didn't want to lose that. And there's a pretty great chance I sell the company, I'm not there anymore either, right? And there's synergies that take place. So there's this fear of it. And I knew that if I did this right, my shareholder would, have exit money of retirement, right? And I still would need something to do. I had a lot of things in my mind, personally and professionally. I'm going, well, what's next for me then? But again, I'm just going to go back to, maybe it's me. I had a shared vision with my shareholder, my owner, and I'm going to take great pride in doing what I'm supposed to do and do it really well. And then Steve's wife would talk to me about it, and I was like, the fear of breaking up like a relationship, to me was big, right? Gosh, we have a good thing happening and do what we're doing. But I had to get over that because it's going that direction anyway, and I had to get on board. And so I spent some time talking with my shareholder about that exit package and making sure that everything's going to work out. And so we did that, or then I started feeling comfortable mentally, right? So now that owner got his guy on board, and I'm sure Steve felt, my owner, that he needs me to sell the company. Who else is going to do it? Because he's now detached and away from the company. And here's the big part, Brian, is that he didn't want to be, if in the event he didn't want the company gets sold, he didn't want to be brought back in to run it or a buyout. He wanted to, hands off, I'm done, moving on with my life. So that being said, that made a bigger role for me, where I had to do all the private equity calls and all the presentations.
Did you guys hire an investment banker, or what was the process? The process after that conversation? And before we get really into the process,
okay,
go ahead.
So we hired, just to make it clean for the listeners, we hired a banker, because you need a banker, and then
an investment banker, not broker, based on your size.
Yep. That's a baker, right? So we went West Coast on this, because that Steve found one prior to the conversation. And so what they end up doing for us is creating a selling deck. Well, aggregate the data, create a data room, put all the right information in there, and then create the selling deck of the best parts of our company that we really do well. And then once we got all that data, which was a long process.
Did you get
right?
due diligence data? Is that what you're saying? Due diligence?
Yeah, just if you're planning on selling a company, I would say start thinking a year in advance, just to get your mind around getting all this information in place, right?
At least, right?
Yeah. Because you're going to need soldiers who are going to help you do all this work too.
Mm-hmm.
So besides bringing me in, you're going to have to bring in maybe your accountant, your CFO, your compliance officer, because there's a lot of information that's going to be requested from you that you're not going to know, and I didn't know,
mm-hmm.
right? Because I was above the weeds.
Mm-hmm.
I was an eagle running the company with joysticks, but down to the granular level, that was the hardest part of getting all that information presented the right way to create this fantastic data deck that told this story on numbers. So that being said, we created this deck. I actually hired a life coach during this process because I was, A, you're nervous, but B, there's a lot online, and C, I wanted to be firing at all cylinders to make sure I'm not nervous, I'm saying the right things, and because I'm talking to an audience that is different than me. They're private equity,
sophisticated buyers.
Yeah, and they have, in my mind, they have a little hubris where they think they know more than you of your company, but they had never been in your company, right? So, right. Then the deck went out. This deck went out to this network within their network, and then we had, let's call it a dozen people that wanted more information, and so then I would be on 75 minutes calls each to speak about the company and what, essentially what I'm doing with you today,
mm-hmm.
What I did and where we can improve and things that I think we can do in the future to make it a $20 and $30 million company. And they would drill me with questions. And I did this and ended up getting 9 offers that was good enough for let's call them full price offers. The approach we took, everybody, is we did an auction.
Mm-hmm.
So we didn't set a price out there, what we're going to sell the company for. I was just going to present this company, and it's probably good that I was just kind of a sales guy, sales-minded guy, because I was selling my way through the company.
Totally.
Right?
It's the biggest sale of your life. Yeah.
Right. That's how I looked at it. I says, I want somebody to write a monster check. And Steve was probably in the background going, yeah, right. And Steve only spoke a little bit of the numbers at the very tail end of all these presentations. I can't share exact numbers, but I was able to sell the company for 11 times our earnings. So
I love it.
And then then it became that company to engage with. And here's a term, some business owners out there, I learned, letters of intent are nice, but they're really indications of interest. So you should really call them IOIs in my mind,
mm-hmm.
because they're just spaghetti against the wall. When a letter of intent becomes real is when you start the due diligence process and you start really getting in the discussions. So, at times I felt that the company was going to sell and not going to sell, even though I had all these offers out there. And Steve just said to me, Johnny, is that if we if it doesn't work out, we got a great situation. We'll just keep going along. And so the due diligence time started, and all of a sudden we had a bunch of analysts and nerds come in and pair everything up and verify everything and see if they call that the quality of earnings, diligence,
yep.
Right? So I want everybody to understand that a letter of intent doesn't only means what they're interested in, but it can go south quick based on the quality of earnings. And it came back to support the letter of intent purchase price. And then on check this out, December 31st at 9:00, I saved this voicemail. I had to run. I worked my tail off. I thought this deal is not going to close because it's in the lawyer's hands at that point. And then I had to run to the hospital. My daughter had hand, foot, and mouth. My 12-year-old.
Oh my God!
And I'm sitting there going, I can't wait to drink, and because I'm so stressed out.
Yeah.
And I get the phone call that we sold the company.
Wow.
And it's going to close effectively on the 4th. And so it was New Year's Eve night, and I went home, made a powerful drink, and I didn't even want to go out. We had all these plans to go out with friends. I said, I just want to go to sleep.
Yeah.
Yeah, I'm just drained. And so the new company took over, and that was it. I stayed on for 5 months after to help them integrate. And based on since May, I've been a free agent looking for what's next for John Thielen.
That's so cool, man. And I just gotta say, like, because I was essentially you in my deal, right? I mean, it was a family business. It was me and my dad, and that, I mean, our stories, like we say, are like, you know, even down to the twins, are fairly fairly similar. And
True.
and how did you? So for me, I had whiplash for years because, like, we're selling, we're not selling, we're selling, we're not selling, and like my comp plan was not perfectly like clear. I mean, I figured out how I structured all mine, but like, was it very clear? Was there like some sort of phantom stock or some sort of like flat fee or something that you and Steve discussed for the success and the integration? I mean, like, how did you mentally deal with that?
I wish it was better. There's at times I look back and, I wish it was, done a certain way. But when you're a small business drinking out of a fire hose, and this would be my first scale and exit, you didn't know what you didn't know.
Yep.
Right. And so we just agreed to a financial number at the end of the day, and a severance and an employment contract for myself. So I was taken care of.
Yep.
But there's other ways to do it. Like, one of my friends in town he's a COO and partner of Meristem Wealth Management. They manage $3.8 billion under management in Minnetonka. And, he mentioned to me all the ways certain executives could be rewarded and exited. Well, next time around maybe. But when you're a small company and you grew it to more of a regional player, and the shareholder's 100% owner, and you have to find ways to work around that and find ways that we're both going to feel good at the end of the day. And
it's so funny.
So both our sides of the street are clean.
It's a good way to put it, man. And like, and what I personally dealt with, JT, is like, we said so when my dad and I had the conversation, I said, you're either going to overpay me and you're going to resent me. You're going to underpay me and I'm going to resent you, or we could figure out what we think is fair. And it was a really hard conversation, but
hey, great point you just made. And that's where my mind mentally was. I didn't want to feel like I took advantage of him. Right. So you might be shocked. Oh, wow. Your president doesn't want to take advantage of an exit. Like, well, I care more about the person than the guy I went to battle with for the last half a decade than I am looking at getting one over on him.
Mm-hmm.
I could have, of course, I could have held it, held the feet to the fire.
Right. I didn't have a non-compete.
I didn't have a non-compete, and I was the president, and I wasn't selling the company, and I was in a great spot. But you know what? At the end of the day, we have one life and one lease on life, and I want to have relationships long term. And so I can honestly say that in my heart, I love Steve. I love him.
Mm-hmm.
And that's why I talk to him once every 7 to 10 days, just about life.
Nope.
I was down there after the sale, hanging out with him on his new boat, hanging out with him. That's a relationship that'll be lifelong. And I feel good at the end of the day, and he feels great at the end of the day, and onward and upward, right?
Yeah, and you've got, like, and I don't know what your thoughts are for owners that are going through this and they're working with someone like you and they're going to battle, and like, I just, you'll learn so much, and you've got plenty of time to do this multiple times again. You know what I mean? Like, and that's the kind of the way helps. Yeah, right. I mean, it's going to be interesting to see how it all unfolds, but like, you learn so much. It's like, I don't know if you thought this way, JT, when you got done with it. It's like a different game. It's a different level of a playing field when you got the private equity and different people up there compared to what normal owners are sitting there trudging away. I mean, they're moving numbers and creating value and doing things that most people don't understand unless you've been through the whole cycle.
Yeah. I learned a lot in this process, even after the sale, where the company who bought us, after all the pleasantries were over and we got into real conversations, they were like, okay, we paid a premium for you guys, and JT, your next initiative is to drive $1.5 million of true cost out of the business.
That's what happened.
So, yeah. And so, because this is private equity. They want to make their return, and then they want to flip, right, in 5 to 7 years. So unfortunately, I built a good and bad. I learned a lot. I built a high touch business model where I took care of our clients, and they weren't that way. And I'm not trying to bag on the new owners, but they had a different mentality. They didn't want high touch, and maybe they wanted those high touch people to go away too. But I know for a fact, as of last week, I know that they have had the first negative income year. Right? They did not grow; they subtracted. So that's unfortunate. I'm not there anymore, but I know some people,
what
moved
made you
on.
quit? Did you quit? What was the past?
Honestly, there was no role for me there anymore.
Yeah.
It was more of a mutual decision going, and they said, all right, well, actually, I'll give you the reason. Make it clear. So I'm an accountability chart, sales, marketing, IT, the chief compliance officer, operations director, all rolled into me, and I was the integrator.
Mm-hmm.
Well, those guys care less about EOS model, right? So they said, okay, here's the new structure. Sales reports to the VP of sales, which makes sense. IT to the IT director. So what happened is I was down to just managing operations. Well, I built the business where that person is truly capable of running operations without me telling her, shadowing her. So at the end of the day, I just didn't have things to do. And so we had the talk, and I ended up, saying, all right, well, I think it's time for the transition. And they said, yeah, let's work it out. And I was on severance and all that for the last.
What was the difference? What was the difference of the different 9 offers? Was it like some strategic buyers? Was it different private equity firms? And do you have any what would that situation have gone differently based on the different buyers and offers?
Well, the best offer was it was a SaaS software business model, right? The second offer was a competitor of the largest screening business in the country. They would have essentially wiped out our operational team, and everybody lost their jobs, really. So that was not so hot. Looking at that one, It was a nice offer too. Then we had individual people like son of a billionaire that wants a job.
Yeah.
and then a lot of private equity groups, right? And then it came down to even the smaller private equity groups that wanted to do the SBA loan and said, hey, let's work out this. But ours
must have been a way different offer, the SBA loans, compared to the other ones, because that's probably a big spread on the different size offers. But
it was interesting. It was an interesting process, and I'm glad it all worked its way out now. I look at it like I got the tattoo of building and now selling a company. That's good for me, I guess. I'm happy about that. And two, I think there's integrators out there, and then there's these 2.0 integrators. I look at myself more as a 2.0, where I have a little bit of visionary in me, but I'm also tactically I have operational discipline that makes me maybe different from some integrators out there. So I like to believe that there's a lot of skills that I've acquired through this, and here we are. So
what is next for JT?
Next for JT is I've had some private equity groups look at me as an operator. One, I've looked at some CRO positions. I've looked at buying some businesses. That seems very interesting. But you know what, Ryan? At the end of the day, what sounds the most interesting is finding another visionary to partner with and start doing a repeat. That actually is what I'm very interested in. But don't know when that would happen. That's hard.
Well, hopefully,
to find, right?
Hopefully you're going to get a couple calls from this interview, because I know that there's, with all the presentations and the workshops and stuff that we're doing, finding that role is so hard. And like you said, going back to your 3, what did you say it was? Someone you can relate to, go to battle to, and match your core values. And it's so important. And if you can do that, then look at what you can do. It's pretty amazing.
Yeah, thank you. Thank you for saying that. Yeah, looking back, I got Steve Gustafson, who I built up, and he got a monster check, and he's retired. that's a relationship I'll have for the rest of my life. I look back on the Navy SEAL who I built his company up and became an Inc. company. We're trading emails this morning because I'm flying to San Diego from the 12th to the 20th. We're trying to work out us hanging out. We chat all the time, and now he's got 3 kids. We're going to go hang out, spend some time together.
Cool.
And then my other shareholder, now he's CEO of Bitly. That's a huge company nationwide.
Oh, no kidding. Yeah.
Mark Josephson. So Mark Josephson and I, we're always bantering, and so I keep my visionary direct reports close, as you can see, and I look back and I'm sitting here with a glass of wine, going, God, I would love to go find another shared visionary to go to battle with and build something again and scale it. So that's where I'm at, while I'm looking at all opportunities, and I'm looking at business plans, I'm looking at businesses for sale, and looking at where can I add value to that too. So that's where awesome. I'm at.
So if our listeners want to get in touch with you, what's the best way?
Jonathan Thielen, like Adam Thielen from the Vikings, but we're not related. But my cell phone number is 612-720-2594. Live in Chaska, Victoria. I have a beautiful wife, 3 kids, 12 and twin 5s.
Twins. Yes. This has been so fun, JT. Thanks so much for coming on the show.
No, I had a fantastic time with you. I look forward to getting together with you very soon. So let's promise that one.